Markets rallying despite inflation and worrying personal savings data. Coming up on Business Matters. And good afternoon. Thanks for joining me today. I'm Paul Graney, standing in for Don Ma. It was a happy Friday down on Wall Street today. All major indexes glowing green on the last day of the week. The Dow rose 1.1%, S&P 500 up 1.6%, and the Nasdaq added about 1% today. But the big winner today was material maker 3M. Its shares up today after a strong earnings report. Look at that. At 3M smashing analyst profit estimates. Under new CEO Bill Brown, the company is also shifting its focus to high-growth businesses such as automotive electrification and high-growth areas such as climate technology. Good win for 3M today. And the rally comes despite latest government inflation data showing prices are still rising, albeit a little more slowly. Today's PCE report showing prices are up 2.5% year over year. Now, investors, home buyers, and regular Americans just trying to make ends meet, all waiting to see the Federal Reserve's next move on interest rates. The pain is now twofold for many Americans. Prices are still rising, and people are now eating into their savings. Today's PCE report showing that Americans are able to put less and less money aside every month. So what can the Federal Reserve do to help, if anything at all? So joining us now is Jim Urio, Managing Director at TJM Institutional Services. Jim, happy Friday. Great to see you as always. First off, strong day down on Wall Street. What is the sentiment among investors right now?
Well, today was an interesting day in that we saw these PCE numbers, and this is what we've been waiting for a long time. The PCE number is supposed to be the Fed's preferred measure of inflation. And actually, the core year-over-year PCE came in slightly higher than expected. And there was about a 10-second moment where the market seemed to care about that, and the market traded lower, the stock market that is. And then all of a sudden, they looked over and realized that was very, very mild. Realistically, the Fed probably is fine with 2.63, what it was. They keep talking about 2% inflation target. Nobody really believes that anymore. People believe it's more like 2.7 to 3%, and this one fell right into that. Now, then what took everybody's focus after that was the personal income number, which was much less than expected. So if that's much less than expected, and there's not this wage-driven inflation, that's what everybody's real fear is, particularly the Fed, then the Fed could ease, which they want to ease, and then all of a sudden the market started pricing in now 325 basis point easings by the end of 2024. As a matter of fact, they're pricing in a 12% chance of 50 basis points of easing just at the September meeting. So that's pretty significant. But I think at the end of the day, what that's saying is that we can all look at this economic data and say to ourselves, oh, things look pretty good. Jay Powell doesn't think so. He's questioning the economic data, and I think he believes there is trouble on the horizon, and that's why he's going to cut rates relatively soon.
But Jim, there's a lot to unpack here, and see if you can do it for us, because when I see the personal savings rate plummeting, it seems to me that inflation is hammering consumers, which traditionally you would think is not a good sign for businesses. So how is it that we're talking about rate cuts, which before were supposed to be inflationary, but at the same time we're talking about consumers getting crushed by inflation?
So the word of the day is bifurcation. So starting 4.5 years ago when we started the COVID mitigation nonsense, it was the greatest wealth transfer from the middle class to the upper class ever. We have this tremendous wealth disparity right now. The bottom 50% of the people that you were mentioning, they've been in a recession for a year. Prices are not up 20% over the last 3 years. They're up 30, 35%. I know that. We've talked about before. I own a restaurant, Branson Palatine. Our expenses are up probably 35 to 40% over the last 2.5 years. Those people are hurting badly. The rich are fine. People who hold assets are doing great. But to put a point on what you said about the savings rate, also delinquencies on credit cards, maxed out credit cards, delinquencies on car loans, these things are all rising at unsatisfactory levels. I think things are going to get bad. The market thinks things are going to get bad. Otherwise, they wouldn't be pricing in a 50 basis point cut in the September meeting. I mean the bond market, not the stock market. Stock market marches to its own drum, and there's a lot of different factors going into that. But the bond market says he's going to possibly going to ease 50 basis points in September. That means a small level of panic, because he wants to just move interest rates lower incrementally 25 basis points at a time. If he has to accelerate that pace, that'll mean he's scared about something, and that scare could be contagious.
Yeah, so I can see we're kind of between a rock and a hard place here, Jim. It could go either way, whether they keep rates, raise them, or lower them. There could be potential problems here. Let's focus on the stock market just for a moment. We see this, what they're calling a rotation into small caps, people betting more on the smaller companies than the bigger companies. Why are we seeing this?
Okay, so for 2 years, everybody followed the AI trade and basically bought up the big six company, NVIDIA, Apple, Google, Meta. You fill in the other two. NVIDIA is the most important one. So, and people were putting on pairs trades, short the Russell, long those stocks. Okay, so back on July 11th, we see the first really good CPI number, and the feeling becomes apparent that the Fed is going to ease rates and short-term rates are going to go lower. Well, the Russell, they love short-term rates lower because 3 times as many companies within the Russell depend on floating rate debt to finance their operation as their broader, larger counterparts. So all of a sudden, the Russell starts to rally. Now, think of this. Everybody's short the Russell and long the big tech stocks, right? If they have to start getting out of the trade, they have to buy their Russell back, exacerbating that move, but they also have to sell their big tech stocks. And those valuations were stretched already, and there was a tremendous concentration of wealth just in those two things. The big six was 40% of the NASDAQ, the big six stocks. They were 30% of the S&P 500. We call them the inglorious 494, which was the other 494 stocks. They were not doing nearly as well as the big six were doing. So now we're seeing an unwind of that trade. Now, one last point I'd like to make is that even if that's a dollar for dollar unwind, you'd think to yourself, well, that shouldn't affect the broad stock market. It does. The stock market doesn't like weird stuff. It doesn't like disruptions. It doesn't like chaos. And this is a little bit of a chaotic move. And that was one of the reasons that the S&P 500 and the NASDAQ both plummeted in the last week or so.
So in a word, Jim, because I've got 10 seconds, you're saying that this rotation is purely a markets-based rotation, doesn't really indicate anything about the real economy.
No, yeah, and it's not a fundamental change. It's market positioning. When positions get too extended and too stretched, occasionally they rebalance. And rebalancing sometimes look like everything's changed to the casual outside mind, like things are falling apart. Now we're probably just rotating.
Yeah. Jim, a lot to talk about. Jim Euro, Managing Director at TGM Institutional Services. Jim, have a good weekend. Thank you.
Thank you, Paul.
And first-time home buyers continuing to face affordability issues. Now get this. Zillow defines a starter home as a home in the lowest third of home values in a given region. A new Zillow report finding that a typical starter home now costs $1 million or more in 237 cities. That's way up from 84 cities in 2019. California, New York, New Jersey have the highest number of cities with entry-level homes worth an average of $1 million. Half of all U.S. states now have at least one such city. And the maker of artificial intelligence chatbot ChatGPT announcing its most direct challenge yet to Google's search engine dominance. OpenAI is testing SearchGPT. It'll combine its AI technology with information from the web to allow people to search for things in the same way they do talk to ChatGPT. Now keep in mind, 57% of Google's revenue in 2023 came from search. OpenAI's original product, ChatGPT, relies on older data to generate its answers, but SearchGPT will provide up-to-date information with links. On the other hand, publishers now worrying that opting to AI answers instead of search results could threaten their business. Web publishers rely on traffic from Google to make money, often. And video game voice actors and performers in Hollywood are now on strike partly over AI concerns. Leaders of the SAG-AFTRA unions have billed AI as an existential crisis for performers. They say actors' voice or likeness could be replicated by AI and used without their consent and without fair compensation. The strike comes after months of negotiations with major video games companies, and a spokesman for the Video Game Producers Party says the offer it presented to SAG-AFTRA does have AI protections. The strike is also over failed labor contracts and pay. And it took 8 years for New York's Uber and Lyft drivers to finally see money from a lawsuit over lost wages. The settlement of $328 million was reached in November 2023 and is the biggest wage theft settlement in the state of New York's history. Anthony Sean Marshall spoke with the director at the New York City Taxi Workers Alliance.
New York City Uber and Lyft drivers will soon be getting fractions of $328 million in a historic settlement.
The $328 million is the biggest wage theft recovery in the state of New York.
I spoke with the director of the New York Taxi Workers Alliance. Their office spearheaded the lawsuit.
And back in 2015, we filed a complaint with the State Attorney General's office that Uber and Lyft were taking the cost of a sales tax and a injured workers fund surcharge out of driver income rather than charging it to the passenger as the law requires and as their contract would have required.
According to Desai, many drivers weren't allowed to get involved in previous lawsuits because they agreed to settle any disputes through a private process instead of through the legal system as part of their Uber and Lyft contracts.
Their drivers were owed as much as $13,000, $10,000. Every single dollar that was stolen from the drivers was earned through blood, sweat, and tears.
80,000 payments will be mailed out or issued via Venmo or PayPal on August 7th. That's not all. Current Uber and Lyft drivers in New York will receive new benefits, including paid sick and safe leave, payment for trainings, trip information statements, and in-app chat support. Sean Marshall, NTD News.
And CrowdStrike CEO says more than 97% of Windows systems are now back online. Last week, CrowdStrike issued an update to its antivirus software that contained a bug. That bug caused Windows operating systems to crash worldwide. The healthcare and the banking sectors were the hardest hit, with estimated losses of almost $2 billion and over $1 billion respectively. That's according to insurer Parametrics. And taking money from Russia, giving it to Ukraine. The EU will transfer $1.6 billion from frozen Russian assets to Ukraine. This is according to the European Commission president earlier today. She posted on X saying that the proceeds will go to the defense and reconstruction of Ukraine. Bit of background for you, about $200 billion of Russian assets were frozen by the EU as part of sanctions. And then back in May, the EU agreed to allocate the interest from that money to Ukraine for military aid and reconstruction efforts. The transfer announced today is the first tranche of money generated from the profits on those frozen Russian assets. And flying electric taxis, roomier planes, improved fighter jets. The Farnborough International Air Show is just wrapping up. Here's what the airlines are doing to attract customers.
The Farnborough International Air Show is a biennial gathering of aerospace professionals.
We travel 4,000 miles in my case to go meet people from all over the world. It was well attended. The weather was outstanding.
Aerospace consultant David Naletti sat through 10 face-to-face meetings with potential clients, in addition to seeing the exhibits. Such as the latest version of the F-16 fighter jet.
The F-16 is still in continuous production, has undergone continuous improvements over the decades. Upgraded engines, upgraded avionics, upgraded weapon systems, enhancements to the fuselage that have made it more and more capable.
Another key attraction, small electric passenger planes.
Pushing up.
About a 60-mile range, flies at about 120 miles an hour. Will take you short distances with respect to flight, but get you across traffic, across town with ease and comfort.
David McBride is the CTO of Supernal, a firm working on these planes. He says the mission is to change the way people get around. The planes can take off and land vertically, don't require an airport, and can fly in cities. But aviation analyst Richard Abelafia doesn't think they'll be changing anything anytime soon.
In terms of actually productionizing them and building large numbers, that's many years away, if ever.
He says there's a lot of interest, but currently no commercial value. David Naletti agrees.
Think about the size of the battery that would have to go into an aircraft operating 4, 6, or 8 motors, carrying people for an hour, hour and a half at a time. Those batteries will be very large.
Commercial plane maker Boeing unveiled roomier cabins.
Offering two architecture types, the A ceiling architecture, creating a greater sense of height within the cabin, and the B ceiling architecture, which offers a greater sense of space or width.
Boeing spokeswoman Laura Fitzgerald says the 777X is the next generation of the 777. The newest model focuses on the travel experience.
We also have increased bag capacity, doubled that of the 777, and reduced closing forces by over 40% on those. Furthermore, to enhance the passenger experience even more, getting more visibility to the skies, we've instituted larger windows.
Airbus revealed the A350, which can fly higher while using less fuel. Airbus is currently working on planes that can fly on hydrogen.
And coming up after the break, attacks on French railways causing chaos before the Olympic ceremony. Crowds of people stranded at stations. And Beijing's latest efforts to address concerns over an aging population, raising the country's retirement age. We have analysis in a bit. Don't go away. Today's headlines. U.S. prices rising slower in June. PCE inflation coming in at 2.5% for the past 12 months. That was the smallest year-on-year gain in 4 months, though consumers are still having a hard time saving money. The company behind artificial intelligence at ChatGPT is testing SearchGPT. It's OpenAI's most direct challenge yet to Google's search engine dominance. In 2023, search was 57% of Google's revenue. And the European Union announcing it will transfer $1.6 billion of frozen Russian assets to Ukraine. It's to aid Ukraine's defense and reconstruction. And railway transport in France falling into chaos today after a series of pre-dawn attacks on the country's busiest rail lines. The coordinated acts of vandalism heightened security concerns just hours before the opening ceremony of the Paris Olympic Games. NTD's international correspondent David Vivez has the story.
800,000 train commuters are blocked today in France and neighboring countries, according to French State Railway Company. This follows a coordinated sabotage of railways during the night in the country. Many stations are seeing crowds of people waiting with anxiety. Signal boxes have been vandalized along the lines connecting Paris with cities such as Lille in the north, Bordeaux in the west, and Strasbourg in the east. The state-owned railway operator calls the vandalism a massive attack, attempting to block all high-speed lines.
I think that there was a real intention to harm and cause serious harm, since the place also where these fires were caused corresponds to bifurcations.
France's railway company has called for passengers who can postpone their travel to do so. Repairs will occur until the end of the week, significantly disturbing all travels. Travelers who have booked tickets to see the Olympic ceremony this Friday are left to worry.
Oh, totally nervous about missing it.
Nervous about missing it, yes. Yeah, because it's something that we've planned and we're looking forward to, and it's almost like a once in a lifetime because you don't get to go to that all the time, so we're hoping we make it.
France's Prime Minister said an investigation has just begun and that the perpetrators knew exactly where to strike. David Vives, NTD News, Paris.
And China will gradually raise its retirement age is to tackle its pension problems amid an aging population. NTD's Don Ma speaks to Ryan Yong, Senior Research Faculty at the American Institute for Economic Research.
Ryan, thanks again for your time. So it looks like China is struggling here with an aging population. So will raising the retirement age mitigate the problems that are coming from that?
Well, so it's ultimately an attempt to put a Band-Aid over a growing problem, as you said, about the aging population, changes in the economic realities of China, and ultimately is probably something that's been coming for a long time. This is not the first time it's been suggested in China or in other places. But when you look at what the retirement age, especially in urban China, is set at, it's set quite low. For men, it's around 60 years old. For women, it's about 55. And as a result, you have a very limited number of working years that cause a tremendous amount of problems. And so you'll start to have lots and lots of people drawing on a system with fewer and fewer workers to support them. And this appears to be an attempt to try to mitigate that.
So what are the potential long-term effects or short-term effect of delaying the retirement age?
Well, so a couple of immediate things sort of come to mind when we think about the overall economic situation in China. The first is we already have relatively high youth unemployment in China, meaning that if we have people staying in positions longer, delaying retirement, we're going to see that problem also exacerbated, meaning you're going to see those same sort of issues that already exist continue to grow. While at the same time, you're also likely to see greater unrest among those that are now having to retire later because they had an expectation they were going to retire at some earlier point. That's the short run. In the long run, part of what you start to see is that this is really a symptom of a planned economy, that this attempt to identify when people should retire, when they should work, really what they should do, those sort of things end up meaning that these are the sort of decisions that always have to come, because attempting to plan one part means that you then have a bunch of other things you didn't expect to happen that you then have to respond to and try to plan. And so it becomes this circular sort of doom spiral of always having to figure out what the next plan is. And as a result, you really start to be focused on responding rather than allowing innovation to grow and entrepreneurship to actually happen. And that's the major problem of planned economies like the Chinese economy.
So a point of focus here is actually the pension system. Can you explain to us where is it at right now in China, and where is it headed?
Well, so the pension system is like most public pension systems across the world. You have demographic declines, meaning that you have fewer number of workers supporting a greater number of pensioners or retirees, meaning that the stress on those pension systems is relatively high. That's going to be true whether it's in the United States Social Security system or the Chinese pension system, meaning that there are simply fewer and fewer workers paying in order for pensioners to receive those pensions. People often view them as this is some sort of savings account, but they're really a transfer across time. It's not as though there's an account just sitting there with money building up in public pensions. Rather, it's a pension transfer across time. And that ends up being one of the major problems as demographic shifts happen, because it's really, if these public pensions end up having too few new dollars coming in to support the pensioners that need to be paid out.
Is it on a trajectory to bankruptcy?
In general, yes. I mean, if you look at the trajectory of all these pension systems, if you project out very far with no change, the answer is they eventually run out of money. And I think that's part of what's happening here with this attempt to raise the retirement age, is an attempt to change that curve about how fast that's happening. But it doesn't really do anything to deal with the fundamental problem of thinking you can control the overall economy and identify when people should be working, when they should be retiring, and identifying that with some great level of precision. Instead, markets tend to work these things out as people gain wealth, save for retirement or save to stop working. They then exit the workforce when they're ready, when they've identified that they have sufficient funds to do what they want. And so instead of it being a planning problem, but for everyone, it's a planning problem for an individual. And we already know that individuals can plan for themselves better than other people can, on average.
All right, Ryan, nice speaking to you today.
As always, thank you very much.
Thanks, Don. Now that's all the stories we have for today. Thank you very much for watching. And don't forget, business matters. Goodbye.